Hello everyone and welcome to ICM's midday session. So it's busy in the markets today. Everyone is waiting for the elections results, and it's too close to call the result yet. And especially we're seeing in the past couple of hours a change in the results or the latest counted vote in a couple of states, especially in Wisconsin. Uh, Trump was leading, and now it's Biden again with a gap of 0.3. However, Biden is still leading in most of these swing states, or what we call swing states. So it's a very close call. It's a very tough call. We might see more volatility in the market going forward as these results are getting closer, and the gaps between the candidates are also narrowing. So let's go over major economic indicators. Over the day, we had services PMIs from the Euro region mainly, and the results were better than the preliminary reading, and this had a bit of an impact on the market. But in general, the market is just waiting or focusing mainly on the outcome of the elections. So going forward, we're going to go over some of the major charts on smaller time frames. We're going to start with the euro dollar. So on the hourly chart, you can see that the market just had a bit of volatility. Yesterday, we had an upward movement throughout the day, and then over the night, we had a very big reversal, and the market almost erased all the gains earned ahead of the elections. So we're now stuck inside the key range of almost 200 points. We're almost trading inside this range. So we're in the middle of the range. It's a bit undecisive how the market is reacting, since both presidents will have to cope with what's happening in the economy, especially with COVID-19 there. So mainly both of them will be going for further stimulus, and this will definitely affect the dollar. Also, let's not forget that the Federal Reserve is also adopting key easing measures or main easing measures, and is ready to support the market as long as needed and keep interest rates near their lowest levels for almost more than 2 years, 3 years ahead. So this is going to weigh on the dollar on the long run. But on the short run, we can just set our trading path to the current range that we're trading in. So any break below the current support near 16 level could trigger further downside towards 1490 level, while on the upside, any further bullishness on the pair and the retest of 1774 could lead to further chances of retesting the highs of almost 118.80, 119. I'm just going to add some indicators to have a better look on the chart. We're using the 100 and 200 exponential moving average, along with the Bollinger Band with 22 inputs and the RSI 14. So you can see how the market is almost settling near the 100 and 200 hour exponential moving average. This is hinting to further consolidation, awaiting some fresh drivers or key insight on the elections results, which could result in a move, a directional move, maybe to retest the bounds of the consolidation, the range that we're trading in. Moving to the British pound, almost same formation. We're almost trading inside the middle range, so you can see we're just closer to the middle band of the Bollinger Band, the 20 hour simple moving average, and the RSI is almost also at the 50 level. This also hints that the investors are just awaiting for further clarification on the results. So we can also highlight the key levels that we're trading at. So on the bullish scenario, or a better scenario for the British pound against the US dollar, any movement above first resistance level near 3080 could lead to a retest of 3140, 3180 area, while a reversal here or a failure to break to further highs from this point could lead to a retest of 2915, and then we could retest this week's low of almost 2855. So these are the key levels if you are trading the British pound against the United States dollar. Moving to the dollar yen, almost same formation. We had the dollar strengthening at the beginning, and then now the dollar is raising most of the gains. We're trading near the coinciding moving averages inside the middle of the range. So also you can pinpoint the range that we're trading in near almost 105.30 and 104 on the downside. So this is almost a 130 pip range that we're trading in. You can trade these breakouts if you feel like the movers that are coming in the market will lead to a certain directional move. If we go to the bigger time frames, we can see that the dollar against the Japanese yen was retesting the downtrend line formed by combining the previous tops. We exactly found resistance here. So still with these volatile markets, still the classical technical is still working. So watch out for any break above this trend line, which could mean to retest maybe towards the 106 area again. Moving to the dollar against the Swiss franc, almost same formation. We're inside the range, almost 150 pips range. We're trading in it. Traders are waiting on the sidelines to jump into further directional trades. So you can just highlight 92.10, the high and the bottom, which was almost near the previous support of 90.90. While any break could lead to further bearishness and the retest of 90 psychological level, while a bullish scenario could lead to a rally towards the 93 handle. Moving to the Australian dollar, which almost erased most of the gains that were earned yesterday. We're still, if you just add the previous bottoms, you can see that we're almost trading at the trend line, combining the previous bottoms. So any break below this trend line could hint for further bearishness on the pair and the retest towards the 70 psychological level. While on the positive run, we also highlighted the downtrend line. That was a key downtrend line. We were able to trade above it, and now we were back below this trend line. We weren't able to have a clear breakout. So watch out if we have a failure near almost the trend line, which is almost the middle range of the election range that we're trading in, near 71.30. So we're finding some resistance near the previous area, near 72.40, and key support zone near the 70 psychological level. So also 240 pip range for the Australian dollar. Moving to the New Zealand dollar, it's almost same formation still for a while from the New Zealand dollar. So if we just go to a closer look, we were finding support near the trend line combining the previous lows, and also a resistance near the trend line combining the previous tops. So here, if we just plot this, you can see how exactly the market found resistance near the line combining the previous tops, and the market moved lower. So this is meaning that we're in a valid sideways move consolidation range. So watch out for any break below this. Any break below the bottom line could lead to a retest the key support zone near 65 level, while any further bullishness on the pair could lead to a retest towards almost the 68 previous zone, 67.90, that we were trading at in almost early September. So this is the setup that we're trading at for the New Zealand dollar against the United States dollar. The dollar against CAD, also same range. We found support near the previous lows, almost 31 psychological level, 31 area ahead of the 30 psychological level. In case we break below 31, definitely we would be aiming at 130 psychological level. While on the upside, you can see how also by joining the previous tops, the previous clear tops, we can see how the market was finding a clear resistance here, making this trend line, this level of resistance more valid to investors. So any break above it could lead to a directional move and the retest on the bigger picture towards almost 137.30 on the long run. So this is the formation that we're trading at for the dollar against the Canadian dollar. On the smaller picture, we're inside a certain range. We almost retrace almost 60%, almost 70%, 76.8 of the recent move to the upside, and still we're now trading near the 38.2. Gold had a bit of a seesaw move, especially following the announcement that Trump was going strong on Florida. So almost most of the gains were raised. Yesterday we were able to trade near 1916, and then we had a downfall towards 1883, and now we're trading sideways inside this candle. So you can set a closer range inside this candle that we're trading in, 1906 and 1884. This is the closer range, the smaller range that we're trading in, and you can definitely highlight the previous levels for further clarification. So if you just set this here, the previous trend line that we're trading at, we touched exactly the trend line near 1916, making it more valid again. So any positivity for gold, any break above this trend line could lead to a retest to the 1930s resistance zone that we tested earlier in October, and then after that we can go for 1975. While any bearishness for gold or bearish outlook for gold bullion, we could lead to a retest towards 1860, 1850 support area. So this is what you need to know about gold. Moving to silver, almost same formation, still on the bigger picture inside this range. So between 2250 and 2550, nothing has changed for silver. We're still trading inside this bigger range, awaiting some key clarity which could drive the market in a directional move. I'm going to use this spot for Dow Jones in order to have a better look at the chart. On the bigger picture, we had the correction of the losses that were incurred last week, and the market stalled at a certain area here, which was almost the channel that we were aiming at yesterday. So you can see how this channel acted. The previous one was a clear reversal here. We had almost retracement towards the channel, and now the market stalled exactly at the bottom line of the channel. So any positivity should be among a further high. A break above the current high of 27,800 could lead to a retest to the upper side of the channel, which sits around 28,400, which is also coinciding with the previous resistance area tested in almost mid-October. While a reversal here or a bearish momentum for U.S. stocks should be identified with another break below 27,000, which could lead to a retest to a minor support near 26,500, and then the key support near almost 26,000. So these are the key levels if you are trading the Dow Jones. Also for oil, we are having some positivity on oil, especially following rising prospects of maybe some cuts from top oil producers in order to stabilize the market ahead of the anticipated drop in oil demand levels, especially with the restrictions going on in the Euro region. So in order to highlight some key levels for oil, definitely the previous support of this consolidation range that was taking place almost in the middle of October is a key area for the market near almost 39.40, while on the downside we need to be careful for any dips back below 37 levels. So these are the key levels for oil. This is all for today's midday session. I'd like to just remind you to subscribe to the channel and click on the notification bell in order to receive notifications when we're live again. And if you have any questions, you can just email us at support@icm.com, or so we can help you throughout the day. So this is all for today's session. Thank you all for watching.